US President Donald Trump has been pressuring oil exporters to keep prices low. But Saudi Arabia's energy minister says the cartel's done enough to boost global economic growth.
We've taken decisions that have had severe impact on our short to medium term fiscal interests. And we did that just the last 6 months. We oversupplied the market, as I just admitted, and caused the inventory builds and brought markets from 100 to 110, where they would have been easily in September and October, to the 70 we see today, because we wanted to lubricate the global economic system.
And other OPEC members agree.
We will do whatever it takes to adjust the supply to meet that demand, and we will not overdo it. That's what's in our hand. What's in the hands of the United States President. When I'm president in the world is outside our control in OPEC, and we will deal with the facts as much as we can.
Khalid Al-Fali says the kingdom will reduce its oil exports by 500,000 barrels a day starting next month. He's asking other OPEC members to match that, so global supplies can be brought down by 1 million barrels a day. And on Monday, that call helped crude prices rally about 1% to more than $70 a barrel. But OPEC members did not agree to cut output in their meeting in Abu Dhabi, and some producers like Kuwait, Iraq, Russia and the United States have been raising their output over the past few months. A year after his detention at the Ritz-Carlton in Riyadh, billionaire investor Al Walid bin Talal is also courting investors to further exploit Saudi Arabia's oil riches. And that's making it harder for the kingdom to convince others to take a smaller piece of the pie. Its lobbying efforts may also be hindered as it grapples with international criticism over the killing of journalist Jamal Khashoggi inside its Istanbul consulate. And even if OPEC members cut supplies, Russian and US producers could jump in to fill the gap, leaving the oil cartel facing a crude reality it may not be used to. Mobin Nasir, TRT World.
And for more on this, Ellen Wald joins me now from Jacksonville in Florida. She's the president of energy consulting firm Transversal Consulting and the author of the book Saudi Inc. Hi, Ellen. Good to have you back on the program. So let's start with Saudi Arabia's plans. It says it wants to remove 500,000 barrels of oil per day as of next month, and it wants other nations to join them so that in total 1 million barrels per day are removed from oil markets. Will that have a dramatic effect on prices?
Well, what we're seeing is Saudi Arabia is sending out the feelers to other OPEC countries and also to global markets to say, hey, look, if we go through with this, if we reduce this production, if we take this oil off the market, what kind of effect are we going to see? And what Saudi Arabia is basically saying is we are seeing less demand for our oil, and so we will perhaps, really what they're saying is cut up to 500,000 barrels a day from exports. That doesn't mean they'll cut their production. They can put that oil into storage, they can put that oil into their own petrochemical plants. It doesn't necessarily mean that they will keep it in the ground, but they're not going to do this alone. And if they can get other producers, especially Russia, Iraq, Kuwait, UAE, the producers that have been increasing, to match that, then they're much more likely to hold on to that production and see if they can kind of push prices up a little bit.
You mentioned Russia there. Moscow seems to be a bit reluctant to this idea, saying that it doesn't want to focus purely on production cuts to boost prices. Why is Russia resisting this idea?
Well, Russia has been putting into place measures to expand its production. They've always wanted to expand their production, and a lot of the Russian producers, Lukoil, Rosneft, have been saying that they're going to increase production, and they really liked this move by OPEC 6 months ago to put more oil onto the market, and it's not going to be so easy to turn the taps back for them.
Let's turn now to another issue, the changing fortunes of the billionaire Saudi investor Prince Al Walid bin Talal. As we heard in that package, his fortunes have changed significantly. He's gone from being held in detention by his cousin, the Crown Prince, to now being the public face of attracting a Western investment to the kingdom. Why is he seemingly in favour again?
Well, what I think we saw was the fact that initially the Saudi government, particularly the PIF, was concerned that Al Walid was really seen as a better bet than they are. And he was really attracting a lot of this investment, despite the fact that he was going out and talking about how great an opportunity Saudi Arabia was. And so that's why he was really essentially sidelined. But now they're bringing him back out because they realize that with all of this instability, political instability, and issues that they're facing, that he is still seen as one of the best faces of Saudi finance and Saudi investment. And I think that they are really trying to use him to say, look, we're still stable, we're still good investment, and here let's pull out our top guy.
Interesting. Okay, Ellen Wald in Florida, thank you again for joining us.